Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets as we get going into the first of 2023 here. It's good to be back on the show, and a great one last week. Miles, I would encourage everybody to go back and listen. I just encouraged here as we ended the fourth quarter on a 9% rally in gold, and it continues. We're now up 3.1% at 1877 as we record. Silver, however, has lagged a little bit. It's down to start the year about 1.6%. Platinum is absolutely flat, up about $5. And so all of that just to kick off the show and segue into some fun chart analysis here, Miles.
Yeah, we've done a fair bit of recap, and now we're on week 2 of 2023. So moving forward, as gold has also done, moving forward here since about November of last year, we're coming into a pretty significant hurdle here. We had one back at around 1,800 or a little under 1,800 in gold, trying to get above the August high on the way down. Then we get above that high on the way up, and now we're coming into this kind of second level, which is the neck of the previous high. So if you look back to the high last year, which was our all-time high in gold back in March, April, we had this little dip down, which kind of set what I would call the neck of the head, right at the shoulder line, kind of the lowest price of that trading range before gold turned down. Well, we've come back up to that price, as you just mentioned, 1877. That is also the 618 Fibonacci correction on the way back up. So there's a couple reasons why we should see some relatively strong ceiling here in the price of gold, at least for the short time. Now, we could do one of three things. We could completely ignore it and push right through in the next few days, which I would argue is the least likely scenario for gold. We could trade here sideways. We could have some up and down trading over the next couple days or weeks where maybe we have a $30 range up and down, and that's about it. That's kind of like what we did back at around 1,800, where we came into the 1,800 price, dropped about $50, came back up, dropped 20, then we started pushing above it, and you sort of like just meander your way past the range and then push through. And I would say that's a relatively high likelihood of that happening. And then, of course, the alternative is we do pull the bowstring back. We do it at some point in the next week. We get a solid reversal here to where you'd be looking at probably at least 1780s, maybe 1730s on the low end, where we have some type of pullback in the price of gold before moving forward.
I'm ready.
I know. Yeah, dollar cost averaging is a lot more fun when it's going down than when it's going up. So I completely agree.
So you described this little sideways move as being a potential. Is that how you would describe silver? Maybe I'm not being fair to silver because it finished the fourth quarter up 25%. And I said that it's down 1.6, but it's had a hard time reaching back to above 24, and not a major correction, but certainly kind of a sideways pattern.
Yeah, I mean, silver's definitely has this look of rolling over. Like we're making this kind of curved top in silver. It has a feeling of rolling over, kind of similar to what we saw back in like June of last year. But the difference is at that time, silver was on the way down. Now silver's on the way up. So my gut would tell me we're going to see a pullback in silver. I think that's probably more reasonable. Although on the other side of that, I kind of have this standing rule that the longer something doesn't make a decision, the more likely it is to continue the trend. You have this long-term standing expectation that reversals happen quickly, continuations take time. So if we do get an extended period of time where you don't see a lot of up and down movements, sideways trading, so to speak, in any market chart, I would argue whatever it was doing before that happened, it's going to continue doing going forward.
No, that makes sense. It's like somebody walking in the middle of a run versus stopping and turning around. They're still going the right direction. And hear me, I hope that's the case, but we always like those opportunities to buy in a dip in an upward trending market. And that's kind of what I'm looking for. Platinum, same thing. I mean, here it had a 24% fourth quarter. We talked about it being flat. You see any difference in what that chart's doing? Is that more like silver or gold to you?
Well, the one thing about platinum, while it's not something that I personally would trade on, I know it's something a lot of people look at, and that's a declining trend line at the top end pricing. So if you look at, say, the high back in March of 2021 in platinum, up around 1350, then you look at the next high in platinum around March of 2022, which was around 1200, and you draw your top end trend line there, that's right where we're at now. So we're dancing around that level now. So there could be a number of traders who are maybe making decisions based on just that trend line, because that is a multi-year top-end trend line. So you could see, again, you could also see platinum take a little bit of a pullback here, but the action in platinum has been strong. I mean, you've had very volatile action on the way up since last September. We had a stall between November, December. We've had a big jump up at the end of December. Now we're kind of sitting here for the last week around 1,075-ish on platinum. So I don't know. I think that trend line might matter to a lot of people in the long run. I don't think it necessarily does, but we'll just have to see what platinum does in the next week or two. I'm a little less confident in my prediction on that.
Well, to start the year here, one of the things we follow too, obviously, is the ratio, Miles, and you're kind of describing necessarily an impact on the ratio. So we started the year at a gold to silver ratio of 76 to 1. We've creeped up now today to 80 to 1. That's another thing to keep your eye on. So if you can see silver's price dip and the ratio climb, what that means is that's when you want to be buying silver even more so than today, or more so than the beginning of the year. So eyes on that. If gold and silver both dip down, again, watch the ratio. Take gold, divide by silver. It's a fun one to watch, and it'll also help you kind of determine which is the most undervalued or which is more undervalued versus the other. Fundamentally, we're starting off the year with not a whole lot more clarity or certainty. See, gold and silver to a lesser extent, but gold is the true money metal, really has money supply, economic health or certainty, certainly the U.S. dollar strength or weakness as an underlying fundamental, stock market volatility, geopolitics, inflation, debt, government spending, treasury yields, interest rates. All of those impact the price of gold, along with just even product availability and things like leverage speculation in the futures market. But think about that's a laundry list of things that can move the gold price. So at any given point, people are asking us all the time, what's the price going to do? Well, what's going to happen in every one of those categories? We've enjoyed this dollar decline from the peak, and you drew up a really great chart to that effect. And does this trend continue or not? Do we see the dollar continue to turn down from that 115 down to 103? This chart is really neat. We've shown it a couple of times as it started to draw itself out, and now we're getting a kiss here on this chart in terms of that counter move of dollar to gold.
Right. You look at a comparative chart of dollar and gold over the years, and you do see periods of time where the dollar and gold move together, as you'd expect, because they're not the only two markets out there, and sometimes other markets get really popular or really unpopular. But what I have noticed when you stretch this out over a number of years is you don't tend to see these touch and then go away again. You do generally tend to see the dollar and gold when they are moving in opposite directions and they do get to similar percentages up and down. They tend to continue going that direction and make a cross. So what that argument would be is as we're seeing gold go up, it's very likely we could see the dollar go down or vice versa if they continue going in alternate trends. But yeah, we brought this up a couple weeks ago when we started to see them get closer to each other. So it's interesting to see them touch, and we'll see if they do cross. They crossed back in May of last year when gold was coming down and the dollar was going up. Prior to that, they ran congruent for a few years, and prior to that they were going in opposite directions too. So we'll just see, but that's just one more indicator out there that gives you the impression that on the next 6 or 12 month time frame, you can certainly expect to see gold at higher pricing, and I don't think Jerome Powell's going to disagree either at the next FOMC meeting.
Doesn't appear like it. That's what's fun about that chart too, is that dollar rally really is directly impacted by the Fed rate hike policy. So the first part of that is a climb. Well, the rest of the world hadn't really been raising rates. Our central bank was kind of leading the charge. now the dollar's really not responding. It's no longer really perceived to be quote unquote strong dollar policy. It doesn't seem to be to me, right? So you're getting this decline in the dollar, and we have not switched streams. Powell is continuing to say that there will be rate hikes, and not only will there be additional rate hikes, probably starting with February, it's going to continue and then pause. Now the talk is there won't be any reductions at this point in all of 23 or 24. So why is the dollar continuing to go down? Well, look at Japan and look at some of these other central banks, Europe. They're having to raise rates too. You're now well over 280 rate hikes in the last year around the world. So that's a big reason. Don't assume that just because they keep raising rates that dollar is going to rally and cause gold to turn down. We're not ready for a pivot yet, especially because of the employment numbers. So really pay attention to what the Federal Reserve is saying. We'll have CPI numbers come out tomorrow at the same day that this show is released. They're hoping that it's going to be less negative, right? That inflation number is going to be better with the CPI, but the employment numbers continue to work against the Fed. The more employed there are, the rougher it is, because that drives consumer spending. And so it's this crazy thing where they actually need to see employment drop or unemployment climb, right? And they need to see the labor market soften a little bit. And because of that, to me, the investors out there that are trying to think that the stock market is the place to invest now because it's oversold, they're not listening to what the chairman is saying. They're not listening to what any of the governors are saying. You've got Bowman, Evans, Daly, Bostic, and Cook, these Fed governors, all saying that we need to continue with the rate hikes. Why would the market rally? They're just not accepting the medicine that they're being fed. And so to me, nothing's going to change. And you've got 33% of U.S. households now used a credit card to cover their basic expenses in December. And those credit cards are at a record average rate of 19.14%. It's about to get ugly. And the real number is you have more than 5 million people unemployed. It's going to get ugly. And it's all the more reason to be positioning in your physical precious metals hedge. They played out marvelously in 2022.
Well, and I'm glad you bring up the idea of foreign nations starting to raise rates as well, because the way the dollar index works, like you said, the dollar has been incredibly strong because it's kind of been the only way to go. If you're looking for short-term cash positions or even reasonably termed T-bills. Well, now it's going to have some competition because there are other first world countries out there that are starting to raise interest rates possibly as aggressively as we have. So that's one reason to continue looking at things like precious metals. On a side note, they haven't really addressed the Fed balance sheet yet. You look at the numbers, they're definitely brushing a little sand off the top, and I appreciate that, but they need to take a shovel to it, maybe a backhoe. So they got a ways to go. We're certainly not addressing government overspending and coming up with the windfall at these higher interest rates.
No,
there's your inflation right there.
$64 billion away. That's a ton of money, but only $64 billion away.
Isn't that
from
like
the statutory
2.5 weeks worth of government spending?
Probably.
Yeah.
Their $31.4 trillion debt ceiling is looming in the very near future. So they're out there selling T-bills so aggressively. They're trying to fund,
right,
because it's way too politically sensitive to try to raise the debt ceiling here, especially now with a Republican-led House of Representatives. You're right. So keep going. None of those things have really changed.
Well, and I would argue those are the three big things, right? It's the Fed balance sheet. It's the international market as interest rates are going up. And then finally, it's federal spending. So those are the three things, despite what Jerome Powell is trying to do. He's fighting three dragons with one sword. So we'll see how that plays out because he's only got the one tool. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by, do the YouTube things. You can find us on our website at McIlvaney.com. We're also on Twitter at ICA Gold or Facebook at McIlvaney Financial. If you have any questions or would like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, we can be reached at 800-525-9556.
Thanks for listening. Have a great week.